Good afternoon, ladies and gentlemen. My name is Alaine Adams. Some people call me StockMom, and it is my pleasure to introduce you to Aftermarket Therapy. This is the place to talk about your trading day, talk about the market, and no matter what happens,
we're gonna be all right. All right, all right, all right. All right, all right, all right.
And it is my pleasure to introduce you to Aftermarket Therapy. All right, here it is, Aftermarket Therapy. This is the place where we come to talk about our trading day, talk about those wins, maybe those losses. One thing I do know is that the market is war. The PTSD from it is real, and that's why I created Aftermarket Therapy. So happy to have you. My name is Alaine Adams. Some people call me StockMom. Let's get into it. Today's guest is Alex. He's the host of Stockcast. We're going to talk about Lucid Motors, EV, the battery trade. We'll talk about a little bit about what it's like being a finfluencer and part of that lifestyle. Hey, Alex, how's it going, man?
Doing good, Alaine. Thank you so much for having me. I really appreciate it.
Of course, man. Thank you for coming on. I know we've shared a couple of stages before, but it's great to see people in person and be able to have these types of conversations as well.
Absolutely.
So, normally I like to start the day off with a quote, and today is no different. Today's quote goes like this. I think democracies are prone to inflation because politicians will naturally spend, they have the power to print money, and will use money to get votes. If you look at inflation under the Roman Empire, with absolute rulers, they had much greater inflation, so we didn't set the record. It happens over the long term under any form of government, and that's our good friend Charlie Munger. This week, we definitely had a bit of a pullback, and a large correlation to that for me was Janet Yellen's remarks talking about the potential for tapering. And at the end of the day, I think that's what a lot of speculative growth trades are balancing out, the idea that we might not have such a reasonable economic environment. And so when I think about my exposure to some of these growth trades, there's a direct correlation to the yield, the bond yield. And how the banks and lending is going to go, as well as personal consumer spending. With that said, do you have any response? Have you been thinking about inflation, or do you just want to get straight into it?
Well, I've been thinking about inflation. It's more, it makes, you can't really say, like, with what's been going on with the amount of money that's been printed over the last year or so, especially throughout the coronavirus, and in correlation with the stimulus packages being pushed out to the people, and specifically where it's going. Inflation is going to happen. It's just how high of a rate it's going to increase up to. It's really a when and not an if. So it's really, you always need to set protection for your cash, set protections for your portfolio, and know where to place it, and know how to play it. So if all of a sudden you see the yield start to increase, you need to play some puts, play some options to make some money to at least protect your portfolio.
Yeah, absolutely. I mean, in any of the segments that we're in, we've definitely seen a rise of speculative investing and people not having a high aversion for risk, right? They're having a really high tolerance for risk. You know, they're ready. And that pent-up demand thesis that we've seen kind of talked about from the retail to the institution, it is playing out. People do have money. Not everybody does, but some people do. And they're absolutely excited to put that money into the market. And when we talk about the supply chain side of it, there is a need in some cases for inflation, for the prices of these materials to go up because of the cost of actually manufacturing them or refining them. With that said, I'll do a quick introduction, and then I would like to know a little bit more about you, Alex. So for me, we've kind of been doing this day in and day out, talking about how did I get into the market and how do I view trading. Mm-hmm. Something that's really important to me is top-down analysis. Every single day on my own, and we also have a pre-market show where we kind of go and do a lot of top-down. I start off looking at futures. I look at the sector ETFs. I look at the indices. I come down to stocks, and I even group those by sector and also by, the comparable stocks. And try to make my way from the top down. Hey, is the Russell doing good? Is it small caps? Is it large caps? Is it specifically in tech? in the large caps, are we going towards energy or financials? And then once I find a sector that's giving me some space, that's giving me some room to run, that's showing a strong trend and maybe momentum, I start doing the bottom up analysis side of it. Now I'm looking at whatever Occidental or Apache. I'm looking at Chevron, and I'm looking at the P&L. I'm actually trying to understand what happened with that 10Q or 10K, whatever it is. What's the guidance for this company, and what can I expect in the future? And then from there, I sort of make that technical bet of, hey, okay, we've reached a low. I'm looking at a support. I'm trying to make an entry. I'm looking for some type of breakout or consolidation pattern. But for me, and I think that it's a misnomer that so many people think that day traders are just, and some are for sure, absolutely, are just going cowboy style and high frequency trading. But a lot of us are sitting staring at a few charts, waiting for that opportunity.
Yep.
Are really playing extremely small movements. It's not 100, 200% daily basis. And taking that, things are going to go to the moon outside of my world really helped me maintain profitability. At the end of the day, I don't know how many times, in the past I've seen something go to 100%. That's not enough. Why can't it go to 2? Well, did you have a price target? No, I didn't have a price target. I just wanted to see it rise, right? And that's totally fine. So many retail investors get started in that way. But I think as time goes on, you start to get tempered. So even from that bottom-up analysis, I started looking at supply chains. And although I'm really passionate about EV and the renewables and sort of the interplay there with the people creating batteries and marketing those cells for energy storage, I'm also really into, I don't know if we can say upstream if it's not oil and gas, but the materials side of it, right? Like, what are the materials inside of these batteries? How can I bet on those components? I know that commodities, and especially these metals, they have to be mined. There's a set cost amount for that, and there's a set amount that most of these mines are able to produce. And that's a number that we can sort of start to base our expectations on. How many batteries do we really think are going to get made? Right. And then from there, it's like, well, who's going to get those? And the same thing with semiconductors, where semiconductors are being made, but the supply is needed to make those semiconductors, one of the main ones being fresh water. It's a little bit easier sometimes for me to track those. So going and doing some supply chain analysis, finding friends who have a Bloomberg terminal, because Lord knows I don't have one. But right, I'm sure you do too. But kind of doing that type of analysis really helped me find my way through a market where I had no idea what was going on. You hear people talking about penny stocks, or maybe should I get into crypto and look at, well, whatever. We're not going to go down that road today. But it also helped decide my risk aversion. Hey, I love growth stocks, but I've been burned on growth stocks. So a lot of times I'm trying to diversify or set things that have some sort of hedge, a delta hedge, a volatility hedge. I had Ben on last week, and we talked a little bit about the vol trade, and I'll leave that alone for now. But also, and we were kind of talking behind the scenes before this started, and it was like, yeah, that is exactly why I hold some major ETFs, or I'm holding on to the Qs, right? I do want something I have a much larger chance of getting that expected return on a yearly basis. And then I can match my portfolio with some of that speculative stuff. So I still have that growth potential, but mitigated by having the vol hedge, having that slower cyclical trade going on, and last but not least, betting on the sector as opposed to betting on a single stock. Although obviously the gains on a single stock tend to be higher. But there's just some thought process for me, and I'd love to know a little bit more about you. So, how'd you get into stock trading in the first place, and how did you start to approach the market? What informed your way that you made your way into this thing?
Absolutely, thank you. And of course, Alaine, the way that you do it, it's so analytical. I love what I'm hearing, and that's how what Alaine just said, guys. If you're listening, if you're from Twitter and you're a long-term investor, that's how you day trade, and that's how you swing trade, and that's the safest way to do it. So the whole process of what she does, that's how you do it. So at the beginning, when I started to trade around 3 years ago while I was in the military. And when there was times off or days off, I would start to day trade. And I've always had a very analytical type of mind. And because I was in the military, not being able to really pay attention to the stock market, I was young. I was trying to kind of like make some quick cash. And I was really young. and still learning. So the first year was a rocky one. It was ups and downs. I lost a couple $1,000s, and I learned from it. But I started to get better, and I learned from it from chart analysis, from where to look for, find the resources from Bloomberg to many other great sources for news. But the biggest thing was chart analysis, finding where to look, how to find it, where the resources are, where's the next rotation. And I started seeing some great returns, and I was able to take care of my family, set up a college fund for my daughter, buy homes. And I was able to really be the father that I'm supposed to. And then the coronavirus really opened up a lot of day trading because a lot brand new investors started to come in, and it caused a lot of momentum trading. But with that being said, with a lot of inexperienced traders, it started to cause a lot of people to get hurt. And then with me still being the military, believe it or not, we actually ramped up more. We became a lot busier. So I couldn't day trade as much as I could. And I got grown tired of doing day trades. And because of my platform starting to grow, and I started to get more followers, and I started to see a lot of them getting hurt from day trades. So I refocused, and I said, I think it's more of a better time to start doing swing trades and long-term investing at the current process with how brand new people are, and to teach them how to investigate into a long-term investment, to investigate into the companies. So I focused on doing long-term investments, things that you can truly believe into a company, real companies, not fake companies, and really just try to educate the retail investors. So we found some great companies, some of them not so much, but we've grown, and I've loved every single time when I've learned that I've changed someone's lives, helped them grow, helped them take care of their families, and that gives me a big gratification. That's really what's helped me grow as an investor, grow as a trader. And in the same way, if you are an investor right now and you're in a single company, you should, like we talked about prior, we actually said that you should probably be in ETFs and ETNs right now because of how volatile the stock market is at times, but always balance out and diversify your portfolio. Don't gamble and be in one single stock, because truthfully, you could easily lose any kind of gains that you've ever had. So that's really where I am at now. So.
Yeah, no, thanks for that, man. And I mean, I think one of the interesting things is the journey from moving out of day trading to swing trading, partially informed by the people that you were talking to and in your community, losing so much money and finding the difficulty. I actually kind of struggle with that reality too, where it's I came in fully day trading, kind of staring at SPY, Apple, AMD, really, really specific kind of small sections and sectors, and trading them to death, and have got on my IG and posted 5 days in a row. I could trade AMD every single day. That's as long as I have liquidity and some level of volatility. That's really all it takes. But A, you can't consistently expect those trades to win. And B, if you do want to have some sort of following and a movement online and be informative to people, day trading's not it. Just statistically, most people will not be able to do it. And ethically, I'm not trading for other people, right? You can call out your trades. I don't know about when you started. I used to follow people on Discord and stuff, and I would follow them and I'd still lose money. They would come out profitable and I would lose money because I didn't have the conviction to keep up. Yeah.
And the majority is with the people that are following us, the people that are following that brand new coming into retailers, they're busy. They're the mom, the dad, the college student. They can't look at the stock market the whole time. Even during COVID, they couldn't do it. So trying to day trade in that kind of situation is really scary, and it actually can hurt you more than good. So the long-term investments, the swing trades, helps people more. And I'm all about gaining trust. I want them to be safe. I want them to be able to trust any kind of investment, analysis that I provide. But again, I'm not a licensed financial advisor. I just provide information on a great company, and they can really make their decisions. I want them to grow overall, know where to find it. And day trades that's not the way to go for me.
Oh, absolutely. There's another aspect too, where it's you can always tell people technicals and you can get everything right and still be dead wrong in terms of the outcome, right? There's so many times where it's just a company that you know is profitable, has been setting up beautifully, and it doesn't have the response for some reason. I think Twitter is a great example of just like they're profitable, they're making money. I'm very confused at a 16% equity drop off of that last earnings, but we'll talk about maybe now's the time to talk about it. So was your trading day?
My trading day was fine. It went
Hey,
kind of
can
like
you
a
hear me?
sideways. I can hear you. You went in and out for a second. But my trading day was fine. It started off strong, and obviously the overall market had a nice kind of a bullish trap, and then it slowly burnt off. But then it evened out. It wasn't really terrible. It wasn't great. It was a sideways day overall. I didn't really do a lot of day trading because I was busy at work and doing other things as a dad. So it is what it is. I didn't really day trade, or my long-term investments remain strong.
Absolutely. Any positions that you're adding to or are taken away from, or are kind of watching a little bit more seriously?
I was really paying attention to FRX with what's been going on with Peloton. I don't know if there was a rotation that was going to happen there. It showed a minor movement, like maybe 6 cents, nothing insane, clearly. But it was an increase in volume. It was we got like around 500,000 increase in volume there, which is really not too insane. I was looking at Arrival with their announcement of Uber. It dropped all the way down to 17.41. I was thinking about adding on the position because such more partnerships that could come for that great electric vehicle company. And other than that, it was really just sitting, watching, seeing if anything was going to break their support and add to them, because I think a lot of great green energy companies are out there, like TPGY, which is EVBox. I think that right now is still a great position to add prior to the SPAC closing. But there's there's a wide variety of great companies to invest into in SPACs as well as stocks overall. I think Palantir is one that's been I've been looking at. I'm like $21. I don't know. Maybe if it drops to 19, I'll add some more. But I don't know. I think there's a lot of great companies out there to add. How about you?
So for me, kind of like you, I've been taking a step back as I'm just feeling the volatility, struggling a little bit to find strong correlation and direction, and just seeing kind of the jumpiness. There have been a couple of sectors that I've been interested in, and anybody who follows me can kind of see the watch list that we're building around. But so one of my bigger trades is I'm still holding Breakwaves, B-Dry, this ETF that follows these shipping routes. And it has a lot of commodities, some of them specifically related to energy plays yet again. And just looking at the supply and demand and saying, hey, I think there's still some juice left in this trade. Right along that, I've got Occidental. So another one, right, totally based off of crude oil prices. And then after that, I'm in Timken Steel, another big commodities trade right there. Looking at the price of steel. I mean, the price of steel, copper, tin, lumber, most of our structural building supplies, and also pieces of whether you want to talk about automotive, whether you want to talk about maritime, they're in high demand right now, and we're seeing rising supply chain costs. So I expect the underlying these commodities to go up in price, and I expect the companies that are selling and profiting off of them to also go up. When we see a company that invests hundreds of millions or billions into a new plant or facility or a new refinery, location, they do that because they expect to make trillions. It's not a question. That is what they're expecting. So I like to see these investments in infrastructure and supply chain, and I expect some inflation, so kind of right back to the quote, I'm expecting these prices to go up. Hey, Chris, is that you?
Yeah, that's me. I just wanted to make sure we're staying engaged with the chat, and I did tell them we were going to jump in a second and get to some questions. A couple of things that we wanted to get to. Cammie is new to the show and wanted to know how long you've been trading. And then a question for Alex and Alaine eventually. Can we talk about EDR?
Sure.
Okay.
Well, we did just talk about how long we've been trading. I've been trading for around 3 years. And then we went through that whole process. Alaine, how long have you been trading?
I've been trading for about 6, but really very seriously trading from, I want to say like 2019, and profitable since 2019.
That's awesome.
The first few were pretty rough. So
it always is. It always is. Anybody that's brand new, day trading on the first couple of years is always kind of rough, but you just need to take your time and learn. And then EDR. I know a lot about EDR. Have you heard about EDR at all, Alaine?
It's the Endeavor Group, right?
Yep, the Endeavor Group. That's the parent company for WME and Zuffa, which owns UFC.
Mm-hmm.
So it's been growing substantially, and it's gained a lot of fire over the last couple of days, couple trading days. It's gone up around, I believe, I don't know, I haven't looked at the chart lately, but every single time I look at it, it's up like maybe 5%, 6%, 10%, but it's breaking out. I've had the chart in front of me, but I think that the overall growth of the company is still strong. The holdings group, they're in great companies, great growing companies. UFC is continuously getting more interest in every single country. It's basically an international sport now, and it's probably one of the top 4 most popular sports out there. Obviously, underneath the likes of soccer or football or the NFL and the MLB, but it's growing. I think that as everything recovers, as they can start to fill stadiums, they'll become even more profitable. So the upside is substantial for Endeavor, and they have their hands in a great amount of companies. But the thing that really caused substantial growth lately was the Elon Musk being added to their board. Mm-hmm. So that caused a lot of Tesla investors and a lot of Elon Musk cult fans to jump in and caused a huge increase in volume. So. What do you have any viewpoints on Endeavor?
Well, it's kind of my feelings with a lot of companies like this, where we just have a really high valuation compared to like a Fox or a Live Nation. They're worth more, right? And the question is, it just implies that they will continue to grow at a rate that's faster than some of their more established competitors, whether it's Fox or Live Nation or whatever, and Madison Square Garden Entertainment. And meanwhile, it has a fairly high burn rate. I think the 2020 cash burn rate is 1.5 billion. So I'm really looking forward to see how the profitability, the revenue growth hasn't changed, converted directly towards free cash flow or earnings. They're spending free cash, right? So that's what's going on. They're burning and not adding to that. That's something that I kind of try to consider when I'm looking at a growth stock and just wondering if they have the potential. I think a lot of these growth dreams are based on the idea that they're going to continue to invest in their infrastructure and their partnerships. And you know what? One thing I can say is I've seen the UFC with the Elon Musk thing. Didn't they have like that? Those Jake Paul, isn't he fighting in the UFC? So we've got like, these young popular YouTubers or something like that. Okay, that's pay-per-view, right? Yeah,
that's they went through Triller.
Okay, well, there you go. With that said, I think it's a high time, sports in general, and the inclusion of any sort of gambling thing with related to sports. I think that people are still excited to watch these events, to have these moments. The fact that we're able to stream all of this stuff means that people can get it inside of their houses. I know that the majority, let's see here, I need to look. I don't know what percentage of their revenue actually came from. Okay, here we go. Prior to COVID, 43% of their revenue came from events and experiences, 36% from talent, and 20% from owned sports properties. And we're seeing those profits decline. So I'd love to see a change in that as we have the opening come from, the reopening and people starting to actually go to these events and, purchase stuff, concession stands, all of that. It's something I'm going to watch, but I'm definitely not sitting in it right now.
Mm-hmm. Yeah, I don't have that large of a position, but I think there's still a substantial amount of growth left for it. Just again, like you said, I completely agree. You just need to see how everything reacts. And I think that a lot of retail investors got involved into this, and they were really in for the quick swing and the momentum trading. And that's where you're seeing a major pullback, where it reached all the way up above $33, $34, and now it's back down to $27.9. That's pretty substantial amount of swing. So I hope that people who've gone on the top at least try to protect themselves.
Yeah, one of the comments, Endeavor tried to IPO in 2019 and failed because of the leverage on the balance sheet, and that was a problem. So, you know what? That's the whole thing about growth stocks, or something that you're expecting to have these fairly large multiples. It's like, yeah, they're going to have to invest, and the way America works is leveraging debt. So more power to them. I do hope I am going to be following the story. But yeah, you want to keep it moving?
Absolutely.
Chris, do you have any other questions or things that you saw?
Not at this time. I'm ready to jump into CCIV. Let's do it.
Okay.
Oh, you want to go straight there?
Can we? Because I feel like we can be so long-winded that it can go 15 to 20 minutes.
Okay, let's just do a quick market recap and talk about some news briefly. So, cool. In general, we're looking at the Nasdaq Futures here. This is a daily chart, so not too much of a long-term play. If you can see here, we're sort of returning and respecting a previous resistance or supply zone, whatever you want to call it, and kind of holding steady there. Now, I know a lot of people have been looking for the growth trade to continue to run. So many people I know who are sitting in Apple lead calls or AMD lead calls. They bought the bottom. They feel like they need to be rewarded, and they're wondering whether or not this hesitation in the market is saying, hey, you know what? I don't think I'm going to see those returns. Is it time to cut my trade? For me personally, I definitely have limited my exposure to some of the growth trades right now. It's not as though I don't believe it. Apple being where it is means nothing to me. AMD being where it is changes nothing about my overall outlook on the company's productivity or revenue potential, especially when we think about all of the places where AMD is involved and just purely the need for graphics cards on a mining level, enterprise solutions on a server level, and corporate level, as well as inclusion in any sort of, wasn't AMD pegged to be building some of the parts of Tesla's autonomous system at some point. So yes. I'm still really bullish on a lot of these growth trades. However, the short-term price action is a little bit shaky. And I do that look to the left, So I'm looking to the left over here and I'm saying, wow, we do have some fairly decent resistance. And right now, currently, I don't know if I want to hop in something that's been downtrending. I would love to see this this support held. And I would also like to see a change in the volume of, buyers versus sellers. I'd love to see a little bit more buying, even if we have some doji days, right? Just show me that people are confident and comfortable to continue to buy at these prices before we maybe make another leg down. And that wouldn't change my overall bullishness for the year at all. But I am concerned about the inflationary cost. Oh my God, Jamie Dimon saying he expects, is thinking that we're going to see tapering next January. That's something. That says a lot. So I do expect whatever growth or infrastructure building that's going on in these companies, I expect that to happen. And I could also expect that to be seen on their balance sheets, right? So sometimes we do have companies where they definitely made a lot of money, but when we look at net revenue, it's not really what you're expecting. And a lot of that has to do with, those investments in themselves. So I expect to see that going on. I expect to see some share buybacks as well. And yeah, I am a little cool on the growth trade. I'd love to see some support in this region moving up. Looking at let's go to the S&P 500 futures. So looking at the S&P, there we go. There's all my Star Wars lines. A little bit of a different story, right? Not so big of a pullback here. Not so aggressive of a high, then a rejection to a low. For me, I'm really loving the stable build, and this consolidation pattern for me is just a great place to move. I'm seeing constructive growth, and yeah, am I not enjoying the fact that we closed below the 9-day moving average? Of course I am. However, when I think about the major players inside of the S&P, honestly, it just says, hey, there's plenty of parts in the stock market right now where there is the ability to gain some upward momentum. There's plenty of places where we're seeing, okay, cool, at this 410 level, which represents, the broad market or the top 500, larger companies in our country, that people are still willing to hold at this level. And I believe the hold over 4,000 on the ES futures or 400 on SPY was a big deal. The hold above 410 is a big deal. And I'm still struggling to feel completely bearish. Sideways movement is totally expected. And then last but not least, the good old Russell, which has just been stuck inside of this trading range. I mean, it's been terrible. for somebody who's looking for this unlimited growth. But if we think about the smaller cap companies, a lot of our like plugs in the is in the Russell. A lot of our smaller EV or battery plays are kind of contained within this, and this says something as well, right? I've noticed kind of a correlation. There were many times where the Russell was strongly outperforming growth, especially large cap growth. And now we've kind of seen that momentum in growth, and we're seeing a range trading pattern happening in our smaller cap stocks, which once again, not a big deal at all. As a matter of fact, range trading is easy, right? I do it a lot when we come to commodities or crude oil. I expect when we hit these lower levels that we've been validated as a support for us to have a little bit of upward momentum. You get these kind of shorter swing trades. And I feel like these types of technical patterns, backed with knowing what the companies actually are that are inside of this index, allow for, really clean trades. So broad market, I am feeling that hesitation. I think everybody is, and it makes it hard to guess what individual stocks or what's going to happen on any given day. But in terms of long-term trends so far, and just looking at it on this, kind of shorter, smaller thing, I mean, the long-term trend is up, and to have these sorts of runs, looking at RSI or MACD or whatever it is that tells you whether something is piping hot as a trade, we've held consistently over our moving averages, and then coming down, respecting them and bouncing above is the sort of movement that I expect to see. So with that said, I don't know if you have any strong takes on the overall market, but it's kind of nice to just be able to view these after hours without the pressure of, oh my God, it opens in, a few minutes, get ready. What are you going to do?
No, it's always nice to, especially during the after hours. It's kind of a calming sense. It's preparing, it's strategizing, and the way that you're seeing it is exactly how any trader should learn. And I know that some kind of inexperienced or amateur trader or investor would be looking at this feeling overwhelmed, but this is exactly what you should be doing. You need to look at the way that the overall market has been trading, the way every single sector has been trading. And the Russell, like you said, a lot of people are trying to day trade. And if you're trying to day trade, that's one of the best sectors, the best places to figure out if it's healthy to start to day trade and try to play it the way that you want, especially with swing trading. And right now it looks like it may have a slight downturn here shortly, and you could probably play the bounce. It's been going through that whole channel, and you could really play that. So I think I love this. This is exactly how investors and day traders should do it.
Yep. Awesome. And then kind of moving over to the sectors real quick. Let's see if I even have, of course I don't. So moving over to the sectors, are you a sector specific person? Because I know that you are very bullish on CCIV or kind of been involved in the EV side. Does some of that move over to materials or financials or industrials perhaps, and sort of the things that you're looking at on a consistent basis in the market?
I'm focusing primarily on technology. I'm big on innovator and disruptor type of companies, but and also in those that are correlating to it. Like when you were talking earlier at this live stream, and you were talking about mining, and you were talking about semiconductors. I'm huge on that, and obviously I'm looking for some larger growth. I have my larger portfolio for retirement and all that. Have obviously AMD and NVIDIA in this, but for my smaller portfolio. And for trying to get some quicker growth, but still a long-term investment type of growth, I'm looking at semiconductors that have high growth aspects, like the likes of SHIMX. Wow. And I think that one has great upside there with the partnership that they have with Qualcomm. So it's SHIMX. That's what they are, and they really they correspond with the likes of the semiconductor. The semiconductor demand in the EV sector. So once we see some more push, some more growth for production, I think that SHIMX has that potential. It was actually forming a symmetrical triangle a little bit ago.
Yeah,
it looks
see that.
Mm-hmm. But it needs to really, number one, it needs to hold its support. It needs to hold that. If it doesn't hold that, then we're going to have a potential re-entry point right below or at $10 if it breaks. But again, I think that it's been healthy. The earnings that it came out a little bit ago showed substantial growth, but I think that It's a very up and coming semiconductor type of company that should break out here as long as it holds its support, and it could break above 1755 like you see at that top as it continues to break out. But I really like that, and obviously the EV sector, and I'm big on the digital wallets as well. But I'm kind of I'm a jack of all trades with a lot of investments, but I think SHIMX is one that has a lot of upside for semiconductors because there's so much focus there.
Yeah, absolutely. So speaking of news, and I mean, I guess I really do want to hear a little bit more. I think I watched it. We told all of the followers to watch it. That was a great interview with the CEO of Lucid Motors. And I'd love to know kind of your thoughts and how you're feeling. How did you feel about those answers? And in general, I guess thoughts on the company. And we'll kind of just let the conversation keep on moving.
Oh, absolutely. Thank you. Well, number one, it was a great honor that the Lucid team even accepted this interview. And right at the get-go, I immediately thought that I wanted my followers to be involved into this. I wanted the FinTwit community to really let their voice be heard. So that's why as soon as this was accepted, I generated a thumbnail, posted on my Twitter, like, hey, guys, it's your time. If you have any questions that you want to know that needs to be answered, comment. And I generated a great group of questions for them to answer. And I wanted it to be constructive. I didn't want a ton of no comments. Like, I wanted real answers. So all those questions were generated from my followers. And there's some questions that I wanted to know as well, but the majority of them I already knew. But I think that there are some things that people really didn't pay attention to or is kind of being overlooked. I was very nervous throughout the interview. I kept on saying understandable or awesome or okay, understandable. I'm like, if I could go back there, I wish that I kind of conducted myself the way that I did during my arrival interview. I was a lot looser, but I felt a little bit of I was kind of weight on my shoulders because of so many people like kind of relying on this interview to answer questions. But it was a great interview. But the answers overall, there was nothing bad. And I kind of like the way that Peter Rawlinson really, he's so technical about it. He's not like, I like Elon Musk, but he's like, if you were kind of comparing Elon Musk to Rawlinson, it's kind of like Steve Jobs to Wozniak, where Steve Jobs is a very influential man. He knows how to bring a great team together. And he knows how to make things successful, where Wozniak is kind of like the man in the middle, like knows the thing to its specifics. He knows, he's the guy in the grease, in the middle of the project. And he has the history of doing that, from the likes of Jaguar to Lotus, to Tesla, and now with Lucid. And that's not anything against Musk at all. It's just like, it's apples and oranges. Both companies will be successful. But I love the fact that when I asked about the Mercedes EQS, Rawlinson did not insult him at all. He was all about it, and it showed a lot of character, a lot of more like strong morality, and that was great. But what I really didn't know, I knew that they were, like, during the unveiling of last year in September when they unveiled Lucid, they did say that they were going to be talking about being a third-party OEM. But what they did not say that they were already in talks with somebody. I didn't think that people really focused on that. And the fact that they said that they were already in talks with companies that have came to them to be third-party OEMs, clearly because of SEC, they can't state anything until everything is official. But to hear that was already in progression really opened my eyes a little bit more, and a lot more excited for the future. And then Rawlinson also brought up the fact that I kept on rewatching. I'm like, why didn't I not capitalize on this? He kept on talking about eVTOL, and he kept on bringing up air taxis. I'm like, why didn't I ask a question about that? Because he's clearly like, I'm speculating here. I have a feeling he's talking to one of them. Like, why would he bring this up? I was not even any kind of thing that I was potentially going to be talking about. And it really made me think that maybe he's talking to one of those eVTOLs that are going through SPACs, or I think that there's a lot of upside here. But I had a great time. I think that I did the best I could, and I look forward to doing more with not only Lucid but many other companies. What did you think of the interview? What did you like?
So, I mean, in general, I think Rawlinson is an amazing orator. The way that he speaks and presents his company, especially from the point of it being a luxury company. I mean, the guy exudes a feeling of luxury and understanding of what a consumer might want, and he represents the company extremely well. And so there was that, right? Like you said, sort of the difference between a Steve Jobs and a Wozniak or something like that, or a Tim Cook. I mean, there are many different types of CEOs, and something that like somebody brought to my attention about Tim was that like the real growth of Apple in terms of their market share happened under Tim.
Yep.
Right. But a lot of that amazing innovation came from Steve, and so I do wonder when I see these CEOs, you know, what part of that chain that they fit in. Are you the innovator? Are you the person that knows how to scale a business to multi-trillions of dollars? Because those are often not the same type of person. And, you know, there were some things that, so although this is not Tesla, previously was an engineer for Tesla, although that is maybe debated, right? The thing that I'm always looking at, especially with all of these Tesla spinoffs, is like the differentiation, and more than just, hey, we have a different car. You know, I liked hearing him talk about the drivetrain, but I don't know. We won't know exactly what is so different about that necessarily. We'd love to hear about supply chain costs, not just whether or not they're going to be able to mitigate the effects of the shortage, which they won't. Because nobody will, right? And so I don't expect the CEO to hop on an interview and say, yeah, the semiconductor shortage is really kicking our ass. Right. That's not going to happen either. So in my reading between the lines of, you know, okay, he can't say anything necessarily to the negative, but I do enjoy that he's at least able to approach this and say that I have my ear to the streets. No guaranteed partnerships or guaranteed stores, and the stockpiling question, which was a great question. As well is not necessarily indicative of an ability to meet future demand. And so that part of it. And I you know, for me personally, like another one of the questions that you asked was, hey, so when are we going to get the Air? When? And don't give me an answer that is like, well, when we know that when we know that the quality is at a standard or something like that, you know. I think that a lot of people assume that what happened to Tesla is going to continue happening, and that is the one premise that I'm questioning. It's what's made me turn out to be a little bit more bullish on NIO, because of that differentiation and that clear direction towards a different population, where I see NIO saying, hey, we want to create a feeling of luxury. Guess what? When you change out our batteries, it happens in, oh God, I forgot, 15 minutes, Jesus Christ. No. It's 3 minutes. Whatever. They said they had the capacity to change out 312 batteries a day, given their battery swap technology.
That's very innovative, and that's very attractive for NIO. And I love that. Go ahead, keep going with NIO. I didn't mean to interrupt you. I apologize. No, you're fine, man. We get excited here anyways. So for me, like looking at that differentiation, gives me a little bit more ability to say, well, you know what, on the speculative growth side, I at least can see how this company might flourish in an area where Tesla won't. Whereas when I look at Lucid, I am not so sure of the same thing. I think they have a very similar rollout strategy to what Tesla's doing. We're starting with this high, premium car, and then moving towards maybe a little bit of a cheaper market. Although the guarantee that they're not even trying to hit the $25,000 car mark. I like that. I don't want to see a new premium EV company try to beat out a Toyota Camry. I don't. It's just not. It's a race to the bottom on that. But I also really do want to see what else is going to differentiate this company besides nice internals, a faster car for sure. But in terms of the premium and luxury market, I mean, them having to fight out the likes of these OEM manufacturers who already have established market share, who already have an established presence, and are going to appeal to people who have bought GM cars before, who have bought Ford, Lexus,
BMW. I mean, I'm really excited for this electric BMW, right? I may be a buyer. And this is somebody who was absolutely looking to buy a Tesla at one point. And then on the other side of the autonomy, right, which was touched upon, and I'd love to know your kind of thoughts and reflections on that specific part of it. But when I think about wanting the ability to interact with autonomy and have my car drive itself around, and knowing that that's going to cost me at the end of the day, I'm really looking more towards the companies that have some sort of established ground inside of that space. And that's companies like, whatever,
Tesla.
Waymo. No, Tesla, not at all. Tesla's not even Tesla's not even on the list. Tesla has 0 L4 autonomous miles.
Yeah.
Oh yeah, I'm absolutely. I'm talking about Waymo. I'm talking about Ford, right? Who has fully autonomous test fleets in Austin, Texas, Detroit, Miami. I'm definitely talking about GM once again, right? And Microsoft with their partnership. I'm talking about AutoX. But these companies have logged miles via the National Highway Traffic and Safety Association, which Tesla does not. And hearing the Lucid CEO be so straightforward about that was refreshing. I'm so used to the Elon misrepresentation. Full self-driving sounds like my car can drive itself. Yeah. And it sounds like I don't have to worry about the steering wheel. And that's not the case. So I did like that transparency.
And to really the overall, that's to kind of add on to it, the whole time he was transparent, he wasn't hesitating. He was well educated on the whole situation, and he wasn't hiding anything. And the fact for any kind of retail investor that's really trying to know like the inside and outs of a company and to see, I would say this, what I liked also to kind of like to answer everything with autonomy is the fact of, it was kind of a joking matter, but he was kind of serious, is that with his history and engineering for the automotive industry, with being a CEO and going for the luxury, in order to hit that luxury quality and to be able to really make a dent, you need to surround yourself with those that are going for pure excellence or have the history of being in a company and have the intelligence for those technologies. That's why he's brought in such a great group on his board, as well as watching his sector. That's why he's bringing people like today. He brought in a former treasurer and investor relations of Waymo as the CFO. He also has a former Samsung executive that's running his assistant driving autonomy system. The way that he's been surrounding himself for everything, and really what makes Lucid different is not only for the vehicle wise, it really just comes down to the way that they designed it, the inside of it. Yeah, it looks nice. I know that Mercedes can really match that because of how it's Mercedes-Benz, but it is the efficiency of the battery. It is what they were originally brought into and created was Ativa. They were a battery company. They were solely a battery company, and they created their first battery for the Formula E racing. And in order to do that, they need to handle high temperatures, very high temperatures, higher than the temperatures that Tesla has ever experienced. And they utilize the exact same technology into the Lucid Air. So you won't experience batteries exploding. You won't see batteries malfunctioning. That's where you're seeing companies like Arrival and many others have these kind of modular systems that handle their own selves and kind of monitor the whole system itself. And that's what Lucid's bringing into it. That's why they have the Lego brick system. I do wish that they would bring in the likes of what NIO has done, because I don't see any company doing that. That's doing the exchange of batteries. But I think NIO has the power to do that because they are also going through a third-party company to do that. Am I not correct on that for NIO?
So NIO is building their own battery swap stations, but they also have a partnership, and I don't remember the name of the company, but it's a large Chinese gas, oil and gas company, petroleum chemical manufacturer, who is also partnered to build a large amount of both charging stations as well as the battery swap stations. So That's it's great. The support, from both institutional, the government, as well as an investment in their own infrastructure that does add some mobility and potential growth to that trade, right? That establishment. Absolutely. Same thing with Tesla and the superchargers. You could say what you want, but that investment in their infrastructure was
Brilliant.
extremely valuable. Yeah, extremely valuable.
Yeah. And
I
I
have
agree.
something to say about, so on the battery side, to my knowledge, Lucid is partnered with LG Chem. LG Chem is partnered with GM, Volkswagen, a number of brands. And so the idea in some ways that they're going to be able to have a battery that is completely revolutionary and different from everything else out on the market, or that's going to give them some extreme level of advantage, to me seems potentially not true. I don't know how to say that in a different way. I'm not trying to say,
Just
right?
be
But
blunt.
right,
Be
so
blunt. Be
the
yourself.
same. There are three major battery manufacturers in the world, and it's CAT-L, LG Chem, and Panasonic, right? And then there are some smaller ones for sure. We could talk about the QuantumScapes or the Romeo, whatever it is. But these people make the majority of the batteries and are partnered with the majority of our OEMs in terms of creating new battery technology. And I've always said this when people were so bullish on Tesla and what it is that they have, and they're saying, oh, the battery, that's what's going to set them apart. And it's like, well, they didn't make the battery on their own. They are partnered with a company that is partnered with many of their competitors, if you want to call it that. And so I don't know why people assume that that battery is going to be able to set them apart. As a matter of fact, as a smaller manufacturer with a smaller supply run, I assume that they're going to have more difficulty actually continuing to get the contracts for batteries. If we look at an LG Chem, and I thought this was interesting, and somebody please correct me if I'm dead wrong. This is, hold on, let me pull it up. Of Energy Solutions, and this includes, just EV battery shipments. On LG Chem side, it accounts for 8% of their total operating profit. This is not a large amount, right? So when you take that and then assume that they have contracts with seriously 5 or 6 major car manufacturers, the idea that even one company is going to be able to, that now we come back to material and supply chain shortages and issues, and the potential raising of cost because of that supply chain shortage, as well as the idea that we're not going to see a full ramp up in production because of limited supplies. And it's not something I hear talked about. I mean, right, a lot of these CEOs can't hop up and say, hey, you know what? Yeah, it looks like we're going to have a hard problem getting the amount of lithium, or it looks like, the same battery that GM's working on that's apparently twice as dense as their current battery. That's the same sort of platform that we're building our battery on. But do you have any thoughts about this and thinking about that side of the EV game?
Absolutely, I see that, because that was a big thing that was being harped on not on Elon Musk as well. He's really highlighted that the fact of the batteries and the supply shortage is a big issue. So overall, every single aspect that you have brought up is something that I've continued to consider into being into a company. And in order for a company to be successful, they need to be able to supply and distribute quickly. And yeah, when it was originally stated that they would not be able to deliver in the spring, that was kind of a turnoff for a second. But then you kind of looked at the fact is that the coronavirus really caused a big hit across the whole automotive sector, and that was right around the time where we started hearing about semiconductor shortages. So I think that was a big aspect to it. But overall, I know that when people did research on them, and if you know me with the amount of research I've done into Lucid, is that I know that they will continue to be supported from the Public Investment Fund, and will be able to get supplies in any way, and not only capital, but as well as they will find other ways to supply themselves. So with LG Chem, I know that aspect of what you're trying to say, like what really changes them. But I think it's more than just the battery. It's the overall, the chassis, the engines overall, how efficient they are. And they're already tested it against the likes of Porsche Taycan, the likes of the long range Tesla Model S, I believe. It's performed well. It hit actually above them. It didn't necessarily hit the 500-mile range, but it hit around 470, and that was a beta. And they filled it all up and to kind of replicate the amount of weight it was. So I think that as they get closer to distribution timeframe, we all will see again and solidify why it makes it so different. But again, Lucid is not just a EV company. They're also trying to go into the energy sector. They did state that they're going to be working on a prototype for solar panels and energy storage, like they actually have it on top of their roof. I hope that's true. But that was actually in the interview itself. So it's interesting to see the pillars that they're going into, and I look forward to them growing overall.
You know, and this is something else. So kind of brought up by your earlier comments as well as, hey, why didn't we focus on the eVTOL side of this thing, or the energy saving component for power storage in the renewables and add additions to the grid, or just solar panels in terms of roofing and some sort of construction style play. And the thing is, it's like we have these companies, they're new companies, they're not profitable, right? Like even when we talk about a Tesla, they just became profitable. And it's like, do you like it when you see a company who apparently makes cars, as far as I know, trying to talk about the profitability that they're going to get from these other sectors? They haven't even proven that they can do this yet. But at the same time, we're expected to add this into the valuation, and it is in that valuation. For Tesla, we are expecting some sort of grid addition, and we've seen that happen in Australia with their blockchain, whatever, selling their energy back to the grid via blockchain auction, which is very cool. But in terms of a company, does it bother you that they're in so many different multiples and haven't proven profitability or even expansionability, is that a word, of their production yet?
Well, for number one, it's not really concerning in my mind because they are beginning. But what makes me not be concerned is because they are vertically integrated. They don't need to rely on Big Brother to help them build a vehicle. They want to be vertically integrated. Not the likes of, like, again, I'm not bagging on it. Like Fisker is focusing on third party. They're going through Magna. That's really going to cause an issue with the margin of revenue. With being vertically integrated, that's what continues to show the attraction of Lucid. And for expansion, part of something I remember bringing back to 2016 was the initial investment from the public investment fund into Lucid of the $1 billion, and then owning around 2/3 of the company. Was the stipulation is that they have to build a factory in their area in Saudi Arabia. So that their international expansion is real and it will happen. And I asked that, and he really couldn't give me a full answer because I believe negotiations are still going on. I wish that he could have, but he didn't. So expansion wise, it's still happening. We already know that AMP1 is expanding. They're already going into phase 2, and they're going to go all the way up to phase 4. Yeah, phase 4 will have the capability of building around 200. I believe it's 200,000 vehicles, maybe 150,000 vehicles from that one single factory. But then AMP2 is definitely coming here in the next year and a half, or at least finalize the plans, and then probably building summer timeframe or end of 2022. That's a prediction, because like if I'm the public investment fund and I gave you $1 billion and you're about to go public, why do I not hear anything about the factory yet? I need to, this was a stipulation. So I know that the Saudi prince utilizes the public investment fund as kind of like he's like the management, and he does oversee a lot of the operations. And they did say that they want to put in around $40 billion into their investments annually. I see a lot of that cash still flowing through, not a lot, but a decent amount of cash flowing to Lucid as they expand. So I think that is an aspect for Lucid in order to not only focus as an EV company, but also be able to broaden their spectrum into the solar panels and the energy storage aspect to it.
That's interesting. And yeah, you know what? At the end of the day, I'm always happy to have different ideologies and approaches to the market, because for me, I don't know that I love hearing all of that at once. I would indeed love to see them just focus on one thing. Please come out with this air at the time, in a reasonable time frame. I would love to see them start to gain some market share. Tesla as the #1 EV seller in the world, are very, very close to that, right? And were for a number of time. Okay, you know what? I know that the growth still has to be there. This doesn't prove anything, but at least we've established the proof of concept that people are going to buy this car and that they're interested in it. And so far for Lucid, we do have these pre-orders, but the orders are refundable. But that's neither here nor there. I think you're in it for the growth side. So I guess before we end on this topic in general, if anybody, Chris, if you see any good questions on Lucid, I know I'm sure other people have some questions for him as well. Let us know. But in terms of the risk management on this trade, man, how are you gonna make your way through it? Are you just long and strong? This is what we're doing. Do you have any stops on this? And if there's anything that would make you kind of decide maybe to start scaling out a little bit or limit your allocation?
So right now I'm still holding a good amount of the stocks shares that I purchased around $11 upon initial announcement, and right now it's holding above us a volume. I'm looking at the share range right now and the total on each level, and it's holding right above a support level where there is a solid amount of shares purchased and held, and I think that the biggest thing is that we're waiting on distribution. If I hear that there's another distribution delay, I'll probably have pull out a little bit. If I see any kind of, I don't think that that's the biggest thing. That's the only thing right now is waiting on distribution. If they all of a sudden say that we're delaying it to 2022, I could see that causing a big issue in the pricing, because what's going to be making you different than the likes of Fisker that's waiting until 2022 or the end of 2022 or 2023 to start distribution of their vehicles, where Fisker is sitting around $12. I don't think that people could handle another fall. So I think that as soon as that is finalized, then there's really no place to go but up, and then finalizing the factory. If all of a sudden talks between the public investment fund and them kind of falls through on finalizing that factor, which I highly doubt. This is the worst case scenario. If they're like, we're done, we're not doing this because you haven't done what you promised, they could just be like, we're done because we're selling our shares, because they hold a decent amount of shares. But again, I don't see that happening anytime soon. My stops, I'm watching that support line. I'm seeing it bouncing off of that support line that's currently around 1775, 1780. And if it can hold that, the worst case scenario is that if it hits that level, that's usually my stop. So I don't want to lose out on a decent amount of profits, but it's really all catalyst wise. I'm very long. I'm very long in this company.
So
For
I
sure.
do have a couple of questions.
Go for it, Chris.
All right, cool. So for Karanvir and Alex, I think he may know you, but he says, what is your long-term price target for CCIV? And just to kind of answer some of the questions, would you suggest it for a new investor?
What would I suggest for a new investor?
No. What is your long-term price target for Lucid or CCIV? And would you suggest this stock for a new investor?
All right, so price target, it really depends on execution. As soon as they state distribution comes into play, I could see it bouncing back up to $30. And then once the distribution actually occurs, we could see it in 40 to 50 kind of, but it's not going to reach NEO type prices. Really just depends on the overall market share. But I think that as long as they hit the distribution price, distribution time frame, and then the expansion, they need to hit that expansion. As soon as the expansion happens, that could increase the value long term. But to give a really long term price point, I think that by the end of 2022, as long as distribution continues to increase, and they roll out not only the Lucid Air Dream Edition, but also the Grand Touring, the Touring, and the Pure, we could see this be a $90+ stock by the end of 2022 as expansion occurs. It really depends on those catalysts and executing them. The biggest thing on a startup company is executing. If you don't execute, you're gonna die. Prime example, NKLA. If you're all about promises but you don't execute, you're gonna die. And they're barely holding on. And everybody knows about my history. I don't care, but it's something to learn from. Every single new company needs to execute. If they don't execute, you'll lose value. So distribution, expansion, I expect them to hit $90 by the end of 2022. maybe even more. And maybe if they get more money coming from the public investment fund, they could purchase a solar panel company to help them build out. But that's very speculative. And for a new investor, I would say yes and no. It really depends on your risk tolerance. I'd say that if you are very hesitant or you don't know anything about the company, I would probably wait until the merger closure, and then see how the price reacts. If it goes up, then you can make a decision. If it goes down, then you could possibly find a price to add. But I think that there are other companies that could help you as they continue to grow and distribute their vehicles, like Arrival. I think Arrival is at a great point in time as they're announcing partnerships with likes of Uber and UPS. Obviously, they're going to be getting deliveries by the beginning of 2022. There's other aspects and other places to grow, and you can build your portfolio, because right now this is a sit and wait type of company for the long term. If you're looking for some quick returns, you can go for the likes of Arrival, which will be popping as they announce. Microvast, it's a very strong EV battery company, and many others. So I think that it really depends on your strategy. If you want to hold a small position, maybe. But again, it's all your tolerance. I can't give a yes or no on that overall.
No, of course not, man. And we
Thanks
don't. There's always a thing that plays saying that this isn't financial advice, and that none of us are acting in a financial advisory capacity. I mean, something that like we sort of talked about earlier was this idea of diversification and portfolio management, right? So there's a part of your portfolio, if you're looking for that long-term growth and willing to pay the opportunity cost of holding, like you said, having money in a stock that, guess what, we don't know. And if it does continue to uptrend, it's going to happen after a near perfect performance and execution on operations side, which is, it's going to be shaky. That's just the way things are. Nothing comes out exactly the way as intended, or we very rarely see those stories. On the other side, so having just taken this securities industry's essential exam, talking about suitability. And I think you really touched on that, but I just think that that's an important thing to kind of like reiterate the idea that, not everything is the same for everybody, but determining your risk tolerance, your long-term portfolio goals, your short-term goals, your needs for liquidity. When people do give financial advice, it's after you sign a document the size of a Harry Potter book, and it's with a lot of warnings that say, hey, if you're going to partake in these types of investment vehicles, here's the potential risk for that. And last but not least, that these long-term, trying to predict price action on long-term on growth stocks, especially ones like this, where it could go straight to the sky. It could absolutely go to zero. Now, we know that, we would hope and seem to have confirmation that it's not a Nikola. They didn't just throw a red flyer wagon with the shell of a car and push it down a hill. But with that said, there's always something, right? And many of these, when we're reading the 10Qs, it talks about the operational risk of losing their CEO or losing key components of their management team. And on the other side, them hiring people from Waymo, that is indicative and really strong, but just shows the potential. I'm just like, maybe if we could end on one thing. What is it, and how have you navigated? You talked about Nikola. The name StockMom in a lot of ways comes from me being the person who's always telling people like, well, are you sure? Do you have conviction in this, and what is it based on? Can we talk about some sort of discounted cash flow, or what are your reasons for taking this trade? What's your maximum loss, allowable losses, and what are you truly thinking that we're going to see in terms of gains, and in what time frame? I always play that role, and I tend to be the bear in arguments, but that's not because I'm overall bearish. It's just I'm always looking for reasons to not take the trade. As opposed to trying to give myself one too. But as an analyst, and people talk about Kramer, people talk about whoever, the capacity to be wrong is there. We're wrong. I am wrong on a daily basis. And people have the ability to back check me because I put out a watch list, or I'll show my account. I came in here last weekend talking about the Breakweave Dry ETF. Guess what? I was going to have to answer to it this week. Or I've been screaming about my Twitter trade that I just don't understand fundamentally why this company dropped 16% in equity value, and I do not believe that this will last. especially given the news of all these partnerships with these different sports teams. You guys, the dip is still there indeed. The content deals with NBC, Billboard, MLB, NHL, just had to throw that out there. Really strong conviction in this particular trade right now. But that thing about talking about stocks on a really consistent basis, having to answer questions on a daily basis, forces you in some ways to have much stronger opinions to answer what people are asking for, and maybe take a little bit of a stronger position than you internally actually feel in the trade, just due to the constant interaction, the constant questions, and a lot of people want to be reassured, and you know, to the best of your abilities, you're going to reassure them with the information that you have. But I wanted to know kind of how you feel just being on the stage, kind of being held accountable for every stock you've ever chosen since day one, and how you address that in terms of the way you talk to it and the way that you've gotten feedback from people.
Absolutely. So the whole time throughout the beginning and to now, there's obviously been some great ups, and we've made a lot of cash on some trades from when I was day trading, doing long swings, from UAVS to MVIS to Genius when it went all the way up to $11. That was insane.
The Genius pump.
That was insane. That was insane. You caught that momentum, and as long as you got out, you were safe. You got a great return. That was like a 6,000% return. But from what I have learned, especially what everyone always brings up Nikola because of me, and I understand it sucks to be connected to that. I'm literally wearing the shirt right now because it always reminds me. It's not that I like them. It's just it's kind of a daily reminder to not only don't go off of promises. I said that at the beginning during this interview. It's don't go off of promises. Go off of execution. Go off the technology. Go off of the product that you see physically. And that's what has really changed the way that I have investigating into a company. And that's where seeing NEO when it was $2.90 or $4.90 or $5, like, and seeing where it is now, like it's ridiculous that it dropped all that low with the amount of technology, and it deserves to be up where it is. And that's where you get those, like, investing into a company like Lucid or many others, you learn the categories. And the way that I respond to people that want to bring up Nikola and talk trash is the fact that, go ahead. I already publicly stated this. I've already stated, hey, I've learned from it, and I said I was wrong. And I wish that I did not become blinded by a CEO. And I wish that he could answer some questions, but he's not. He's hiding. But I will say this, it made me a better investor. It made a lot of people better investors and traders, and that will never happen again, ever. So that's how I really respond. Yeah.
I hope you don't take it too much to heart. I mean, we are all a part in this market, and at the end of the day, we are all able to be influenced. And what I'm hearing is that you don't have a crystal ball, and you can't predict the future, and you're not making 100% on every single stock. You know, that doesn't sound like a crazy thing. Plenty of people got fooled on Nikola. That is why it's such a crazy storyline.
Even GM.
Yeah, exactly. Right. That what was like $1 billion investment or something? $4 billion? Thanks. It was $2 billion, right? So it's not as though you were the only one, for sure. But the idea that risk management, you know, and preaching just the duality of, we've shared rooms, and I try to talk about the bear case and the bull case for anything. So it adds perspective. I don't want anybody to come in and listen to what I say or what you say or what any of the guests say, because God, I've had some amazing guests on, and I thank everybody, and just make a trade-off of that. I want them to understand why we're thinking what we're thinking, and hopefully have the ability to navigate based off of their own suitability and needs. And so I appreciate you for coming out and doing that. Last thing, because, and this is going to be, we're next week, we're definitely talking crypto. I'm going to be talking NFTs. I'm talking Ethereum. I may indeed end up having to talk Doge as we continue to see this pump. But the inclusion of crypto as a payment factor and on Tesla's balance sheet for sure. Do you foresee any sort of interaction with this on the EV side and any of the companies that you're looking at, and any sort of positive, negative mobility? Are you indifferent to the reality of crypto alongside some of these companies?
I'm kind of indifferent. I think that Elon and his team kind of took advantage of the pump and was able to generate some actually increase in revenue, because that actually helped their balance sheet look a lot better than it could have. And crypto is such in my mind such an unsure thing, and I just need to learn more about it overall. Doge was a fluke for me. I put in around $400 in the summer, and I tweeted about hey, I'm going to throw in a couple $100. It's less than a penny. It's 0.0022, and I made insane amount of cash off of that. Like, I shouldn't have made that amount of cash off of a $0.002 worth of a crypto. And I got out at around 53 cents. And crypto is very volatile. As high as it can go, it can drop just as fast. So we saw multiple spikes and multiple crashes on crypto. I really personally probably not want an EV company to add crypto to the balance sheet. That's just my perspective. But because, especially those that are starting up, because you cannot put your revenue or your capital into something that you're not sure about. So that's my perspective.
Yeah, absolutely. I mean, I've even been somebody to really agree with you and can count that as sort of a little bit of a negative and a undecided point, as this thing is really being held as an intangible asset, as opposed to any sort of actual true revenue. But it is interesting, and I definitely do like the idea that these companies are finding a way to hold money. And you know what? Next week, we're going to talk a lot of intrinsic value questions, and potential market cap, and why maybe somebody would have the premise that it wouldn't go down, or why this might be a decent investment vehicle alongside a country that's dealing with inflation. And the you know what? The use case that Elon said in terms of using it as a way to gain some yield while still maintaining liquidity, if true, I like that as a rationale. However, in terms of a new company, in terms of growth, and in terms of risk exposure, I absolutely agree with you that I don't want to see a new company that's barely profitable throwing whatever free cash flow that they have into Dogecoin. Dear God, they'll make it dive off the ship really fast.
What I would say is that instead of like kind of going off of where EV was, if you want to have a little piece of any kind of interaction with crypto, or the fact of the matter is that we are in a digital era, and there will be digital currency here soon. Like, you can't fight it. But I don't think it'll be Bitcoin, and I don't think it'll be Ethereum. I think it'll be something that's been created. And if you hold those that are digital wallets, like PaySafe, like SoFi, like Square, and like PayPal, you may be able to go with the ride. And then once the company that's announced that we are the ones making the digital currency, or we're the one that's running the balance, then you can get onto that. But I don't. That's my perspective. I'd rather hold digital wallets than the digital currency itself.
Hey man, that's you. I love that perspective. I'm definitely a little bit more, I think, open to exposure to direct crypto volatility. However, my total allocation towards that is under 10%. So take that as you will. Right, exactly. It's not like I have the strongest levels of conviction, but seeing the movement that we've seen in that market, and then like the stagnation on the growth side, and then the Nasdaq, and noting that correlation between, guess what, the same people who want to go full in on whatever the newest, smallest American EV company is, because Joe Biden said that he was going to be focusing on American EV, and they see, 2 days of stagnation in the market, that's a sell sign for those types of people. They're dropping it into Cardano the next day, or whatever it is. So we will have an interesting discussion, and you know what, regardless of whether or not I'm willing to allocate more, regardless of whether or not I enjoy the risk, I definitely do want access to growth, whether that's EV, whether that's some sort of renewable energy platform, or if it's some sort of blockchain-based technology. And there are companies that are, on the stock market that are sitting in blockchain-based technology, or the renewable trade towards that. But with that said, man, I don't want to talk your ear off about crypto. That's a whole nother hour, and we're probably going to get the time to wrap it up signal very soon. So with that said, do you have any final thoughts on any of the things we talked about? Do you want to plug your podcast or anything like that, man? The floor is yours. Go for it.
I really appreciate it. Well, first off, I want to say thank you, Alaine, and thank you, the Benzinga team for bringing me on. I look forward to coming on again if you would have me. But really what I want to say is that it doesn't have to be a specific topic, but I will say this: when you are investigating into a company and you want to really learn more about the company, you need to know the resources into it and then learn. So go into don't just go straight to the investor presentation. There's more to it. You need to look into the past events of the company being created itself, from who was involved, from the likes of like finding out that the Saudi Arabians were involved with Lucid and the stipulations on those. You need to learn. You need to learn the supply chain. You need to figure out what makes them move. And that's exactly what Alaine said at the beginning of this process of how to kind of like a day trader. You need to do that the exact same way when it comes to investing. You need to look at the whole picture itself and not just one specific point, and not just everything like they come and package something like this and go, here you go, read this. That's everything that you need to know. That's not the case. You need to learn everything. So look at it. And when you look into a company, don't just invest into something that is easily replaceable. You need to invest into something that really will change the world. That's why I'm huge into innovators and disruptors, something that will try to change the sector and make it work better. Because if it's not changing, then why should I go? You're just going to be the next Tesla, or you're going to be the next PayPal. What's going to make you different? So that's what I'm huge for. And I say that more on my YouTube too. It is the Stockcast, and you can search there. That's the interviews there. But I'm always here, and I really love the fact that Alaine is here to kind of teach you guys and remind you guys of, hey, you don't always have to look on the bright side. Let's look on the reasons why you might not want to invest. So I think that you have to have a balance on both sides as a trader and an investor. So that's it for me.
Yeah, thank you so much, man, for coming. I absolutely appreciate having you. And of course, I'd love to have you again. Next time we can go deeper into the SPAC side of it. Or I wanted to talk about all the EV companies and do a real breakdown, but you know what? It's only time for so much. And I was really happy with a lot of the questions that we had. And so I also really encourage more people just to throw your questions in there. And if you have a longer story or something like that you'd want us to talk about, like I'd love these trading stories. I do scour Reddit, and I have a bunch of them that I want to talk about. But once again, time allocation is always difficult, and I have such interesting guests on. So I want to let them have a chance to talk, and I also want to get into some of the things that I'm interested in. So with that said, I guess for me, I'll sign out on the idea that, you know what, things don't always go straight down or straight up. We will always see a consolidation pattern in between those movements. And for me, that consolidation can be constructive. I actually really enjoy seeing these doji candles. I enjoy seeing stocks and indices in general hover in a certain range and show that people are confident to hold at this range, so we can make that next leg up. So whether or not we do actually break to the upside overall in our in the Nasdaq and hold these positions and start to move up, or break to the downside, doesn't change my overall feeling that I am bullish. The reopening trade is killing right now. God, we didn't talk Caesar or Fubo. I saw somebody talk about that. I mean, I love these gambling stocks or that exposure. But yeah, with that said, I appreciate you, Alex, for coming. I appreciate the Benzinga team. Always happy to be here and happy to have these conversations where, you know what, we talk stocks, but it's really open format, and we can talk about, hey, how does it feel to get ripped on Nikola when you thought you were right? You know, I will absolutely at some point come in here and say I got ripped on something. It happens every once in a while. It's okay. And this is the place to do it. So thank you so much for being vulnerable and talking about some kind of tricky things. And yeah, I guess that's it for us over here. I'm going to play the outro song.
Thanks so much. I appreciate it.
All you need is love. Oh, yeah. All you need to know. Ooh, I just want your heart. Oh, yeah. All you need to do